one of the things that's kind of been tricky about this market is we have so many stocks that are trading below their 200-day moving average lines. So what's an investor to do rather than waiting for some of these to get back up to their highs? Is there a way for us to be looking at bases that are forming maybe lower in the overall structure on a weekly chart?
Yeah, well, I think visitors to investors.com and readers of IBD Weekly have probably heard the term bottoming base a little more often, and I've made some decent money on a couple of them recently. So I think it's just important. People still get a little confused as to how to recognize a bottoming base. So we've got two good examples of what to look for. But in this current market environment where yeah, you've got some healthcare names that are back near highs, but you still have a lot of stocks that are 30, 40, 50% off their highs that can show pretty good technical action while they're off their highs. So we call that a bottoming base. They tend to form when a stock is stock can be 20, 30% off its high or more when a bottoming base forms. So I think it's just important to learn how to recognize them, and so we've got a couple of examples here.
So you want to go over the first one here, the Ollie's bargain outlet? Do you want to start off with that one, Ken?
Yeah, sure.
Okay, so Arusha has showing his MarketSmith, and so again, just as a reminder for folks, you can always check out the video here where we'll go through some of these charts, and that's at investors.com/podcast. So, one of the things about Ollie's, as you mentioned, this was pretty far off its highs. If you look at where it topped out. So, is there anything as a precursor? I mean, pattern recognition is picking up the base, but is there anything that you need as kind of a precursor to that base? Before you even consider it, anything on the fundamental or technical side?
Well, first of all, you need a prior uptrend, and that's the most important thing about a bottoming base, because people will see a stock go, 20%, 30, 40, 50% off their high, and then, when it's fallen 60% off its high, and then it starts to move sideways. It doesn't rally. It just kind of tries to grope for a bottom and move sideways, and then it maybe it tries to break out from that pattern. But that would not be a bottoming base because there was no prior uptrend. So I think with Ollie's, there you have noted the prior uptrend. You can see the stock was down, and then it tried to put in a bottom, and then it started to rally. There you go, and there's your uptrend. So the stock was, showing strength ahead of the base forming. And see how far the base formed off of the 52-week high. But this is one that worked. I know, this one was brought up on IBD Live again by David Ryan when it was. He was just noting the stock's strength, and I actually got in this name on June 16th. It was a little after the move above the 200-day moving average, but I was not interested in buying Ollie's if it were not able to retake that 200-day line. So I wanted to see the stock move above the 200-day line, and then just kind of make a case it was finding support above that price level. So on June 16th, was the day it was up only 0.7% in light volume, but I just it was still in buy range, holding above that 200-day line, and that has turned into a nice winner just in a small group of stocks, and I'm holding with a nice profit, and hope to be able to sit with this one for a long time.
What about like relative strength? Are you looking at the relative strength line during this time when considering potentially buying it?
Yeah, absolutely. And you can see in Ollie's relative strength line really started to swing nicely higher when it moved above its 200-day moving average. So yeah, and typically when a bottoming base is forming, I'm not looking at stocks with relative strength ratings of 30 or 40 or 50, really low like that. I don't remember what Ollie's relative strength was at the time around June 16th when I bought it, but I know it was solid. And so this was, this was just a classic bottoming base that yielded a good entry. But we were just talking about wanting to see the Nasdaq and the S&P 500, if they can eventually get above their 50-day lines. Can they find support there? Can they hold it? Can they even trade sideways and move above it? And that's generally what Ollie's did when it initially moved above the 200-day line that was on June 8th. It just kind of straddled the line for a little bit, and then when I picked it up on June 16th, it was making progress from the 200-day line again. So just a good example of a bottoming base that has worked out nicely.
How important are the fundamentals in this case? So, I mean, for Ollie's, you look at the numbers and there's a lot of red. The growth here has had some negative numbers on both the top line and bottom line, earnings and sales. Now, granted, we always say that the market is a forward-looking mechanism. It's looking 6-9 months out into the future. So, what kind of gives you the confidence that, hey, the numbers might be bad now, but they look like they could be getting better, or is it just a technical play completely?
Well, I mean, for me, the big annual estimate, Ollie's is currently in its fiscal 2023. Fiscal 2024, they have a big annual estimate there that caught my eye at 48%. Those green arrows on the MarketSmith chart mean that estimates have been headed higher. And then we were talking about Ollie's latest earnings report, and they gave a pretty good outlook, and talked about pretty strong business going forward. And it's in a good industry group because Ollie's Bargain Outlet and a lot of these discount retailers have been showing relative strength, because the thinking is they're going to be able to do pretty good business even if the economy is in a soft spot here, because of the the value proposition that they offer.
Yeah.
So,
go ahead, Ken.
yeah, no, but that was basically the picture that Ollie's painted for me. But I have to say, the technical, probably first and foremost, it was a technical buy. I don't remember the last time. In fact, I don't think I've ever bought a stock that showed 4 quarters in a row of declining earnings and sales. But I know that a lot of retailers are in a special situation as they try to come out of they're coming out of COVID and lockdowns. There's a lot of recent earnings and sales that look like this, but a lot of these companies feel like they're turning the corner as well, and I think that's reflected in the big annual earnings estimate that they have for fiscal 24.
Yeah, and when you look on the weekly chart, you can just see a number of pretty nice big blue bars right there, showing some good, those skyscrapers that Bill would always talk about. Now the other thing, well, my other question here, Ken, was that pattern recognition actually picked up a base here. Is that a requirement that you look for in a bottoming base? Is that just like, does that maybe move it up a tier, that wow, it actually picked up one of the kind of the bases that we recognize and we ideally want?
Well, it just confirmed what I knew, is that there wasn't a little bit of a prior uptrend. And again, I think that when we're talking about a prior uptrend, we're not talking about a 5 to 10% rally. We're talking about, I think, what the number is, 20% minimum, maybe even a little more than that. So we want to see a meaningful uptrend, and Ollie's showed that. Pattern recognition is for the most part pretty accurate. It has a few little missteps here and there. Sometimes they recognize double bottom patterns that maybe a little bit questionable, but it's pretty good about recognizing cut bases, whether they're forming near highs or forming well off highs, like what happened with Ollie's.
And it's probably worth just taking a look at the monthly chart, just as a reminder that Ollie's had this phenomenal run after its IPO, and this happens a lot of times with retail when they're expanding, and it's kind of a a newer name, and it's opening a lot of stores. You've seen that with Chipotle Mexican Grill, so whether it's retail restaurants or retail just in, purchasing. So when something has such a strong move like that, and then kind of goes nowhere for years, is that something that concerns you? Is there a depth here? Again, how far it came off? Um, do you do you have any concerns? Do you need to see something else in order to, I guess, give you that conviction that the worst is over?
Yeah, I mean, I have to be honest. I mean, 99.9% of my technical analysis is done with weekly and daily charts. In some situations, I mean, for Ollie's, it's good looking at that monthly chart because you're right. They went through a really rapid growth phase in their early stages of being a publicly traded company, and then yeah, it had a couple of sharp pullbacks. But I'm just kind of now I'll step away from the monthly, look at the weekly chart. What are the
Mhm.
elements of this bottoming base that are forming? What are they saying on their earnings conference calls? And yeah, I just ask just to try to check as many boxes as possible. So first and foremost, like I said, 4 straight quarters of declining earnings and sales is not anything to get excited about. So the technicals really trumped everything here. And it's worked out well, and I'll just kind of post breakout the stock has done absolutely
Yeah.
nothing wrong. So I may decide to trim the position if it pulls back to a short term support level and doesn't find support. But at this point, I could probably just wait for you know maybe I won't wait down all the way down for a test of the 10-week line, but that 10-week moving average is still holding above the last buy point, so still looks good to me.
Mhm. So another example that you had for us is Grossly Outlet, and the ticker symbol on that is GO. This one's almost right there back at new highs. It's had a phenomenal move off of its bottom. So in a lot of ways, it just looks very extended right now. It has barely given a break. So what was it about this one? Just kind of walk us through it again. Those elements of the bottoming base that were in place for you to get an earlier entry on Grocery Outlet.
Yeah, so I can't tell if it is pattern recognition recognizing that the bottoming base. Yeah, right. I can't tell.
It's consolidation. It's picking
It's
up.
a little
It's
consolidation.
actually
Yeah,
up
same
though. Yeah.
same difference. Sort of a little shallow cut base, and then the breakout was in early March. I wish I could say I bought this when it broke out of the bottoming base. I didn't, nor did I get it off the that 10-week moving average. But I'll give you my reasons why I eventually bought it. But again, with Grocery Outlet, tracked in the same industry group. As Ollie's, by the way, people tend to think of Grocery Outlet maybe being a supermarket operator, which it is, like Kroger, but it's more of a kind of big buy big at Grocery Outlet. So it's in a strong performing industry group, and you had again a nice little prior uptrend, Justin. If you can just kind of point out, yeah, there's your prior uptrend, and then the stock pulls back, and then again, base is forming below the 40-week moving average, but it eventually breaks out, finds support at the 10-week moving average. Now let's go back to the daily chart here, because I don't have as big a gain on Grocery Outlet as I do with Ollie's, but I bought actually both stocks on the same day, June 16th. So when I saw after the 10-week line, I said, this stock is really showing relative strength. I went to the daily chart and then watched it pull back very orderly down to the 21-day moving average. And on June 16th, when it crossed that recent high of 39.50, and there was good volume in the stock, is when I bought it. So I don't have a gain of it's obviously a new holding, and it was a bit of an unconventional buy for me, but it was another good example of a bottoming base that launched a really nice price move here. So the buy wasn't as well timed as Ollie's, but it did work nicely after I picked it up off the 21-day line. And I have to say I've been doing more of that lately. We're not really getting pullbacks to the 50-day moving average at this point, but pullbacks to short-term support levels like the 21-day. Have can be a viable entry in my view. So that's what I did with Grocery Outlet, and sitting on a gain of close to 10%.
Now, will you when you're buying off the 21 day and out of a smaller consolidation like this, are you going to treat it a little bit differently with Ollie's? You were going to give it a little bit more room, let it test the 10-week line if possible. Are you
Uh,
taking that same kind of approach with this, since you bought it a little bit higher than the 10-week line?
Yeah, no, it's a great question, and I am handling those stocks differently, because I don't have as big a profit cushion
Mm-hmm.
with grocery outlet, and because it was a bit of an unconventional buy. I mean, I wish I could have gotten it off of the first test of the 10-week moving average. That would have been a good entry as well. But because I got it when it was crossing over that 40 level. This one, I'll wait and see, just what a test of that 21-day line looks like, which looks to
Okay.
be right around 42,
Yep.
and may decide if there's a bad break there, might just might just cut ties with it, and but that only because the buy was a little later. With Ollie's, it was really in the early stages of breaking out of that.
Right.
Mm-hmm.
It was breaking out of that bottoming base, so bigger gain and more cushion, so I can have a longer term view with that one.
And can we just real quickly address, maybe go back to the weekly chart on Grocery Outlet here, and for a while there, the action on this was just really, I mean, like going back to 2020 and 2021, it seemed like every time it was making progress, an earnings report would come out and just whack the heck out of this thing. And that kind of left, again, thinking of this from the bottoming base, as soon as it crossed above that 40-week moving average line, it just felt like there was all of this overhead supply. So is there a time period in which, I'm not as bothered by that overhead supply anymore? Or is that something that you're always taking a look and seeing, okay, how do we move when we get up to those prior levels where there's a lot of congestion, a lot of, trading? How do we handle it? Or is it, it's old enough that it just doesn't matter anymore?
Well, I mean, overhead supply was should have been an issue with Ollie's as well when it started to move out of that bottoming base. But when Grocery Outlet first started, breaking out, it moved above the 40-week and the 10-week lines were nearly or converged just before or just after the stock eventually broke out. So I really didn't look at. I didn't really look at the highs maybe in January 2021, November 2020. Not really thinking that overhead supply was going to be a big problem for the stock, only because I saw how it was rallying after the breakout. Remember, this is a stock that had many up weeks in a row, and we'd like to see that. I know Bill O'Neill calls out in his book, and you look at. I mean, there were
It's like 10
many,
weeks up in a
yeah,
row. Yeah.
10 up
And
weeks. Yeah.
closing at the top of the range too.
Right.
So yeah.
Exactly. So that's one way a stock can easily overcome overhead supply. So then after that, it just made a nice pullback to the 10-week moving average, reversed higher with some volume, and then after that first test, I was like, okay, I really feel like I need to find a way into this stock. So that's when I started watching it after that. First test of the 10-week line, and then I saw a pretty constructive pullback, short-term pullback to that 21-day line, and started a small position, and we'll see how it goes.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.